Equities Lab is a next-generation stock market analytical software that provides investors with the resources and power they need to become a successful investor while providing users with high-quality buy or short suggestions. I'm going to give you a quick demo of our product to get you acclimated. The first thing I'm going to do is create a watch list based on one of our market-beating screeners. I chose the strategy value stocks with high expected growth. And notice how it shows up in this buy tab. Now I'm going to save this watch list and I'm going to get a wall of buy suggestions. Now we have plenty of information available to help you lead to a buy or not buy decision. For instance, once you click on a stock, you'll notice a range of information. This particular tear sheet is called synopsis. Now I can change that to a range of different tear sheets. For instance, key ratios, which compares pieces of data pertaining to the stock with their industry average. Now we also have multiple analytical tools to help you get an idea of the actual stocks that pass the portfolio at any given time. For instance, results breakdown displays pie charts that break down your portfolio based on a range of different data, such as sector, market cap, or price to sales. Now the results table is a bar graph that displays sector on the x-axis as well as price performance on the y-axis. Now I can change the x and y-axis to be virtually anything I want. And the scatter chart essentially does the same thing, but it plots each individual stock on the graph. And again, I can change the x and y axis to be virtually anything. So let's backtest this strategy to see how well the value stocks with high expected growth screener has performed in the past. Now notice this beautiful green line. This green line is a portfolio return if you would have bought stocks when they passed the strategy and sold them when they no longer passed with a weekly rebalance. Now I can change the rebalance to be anything I want, but let's keep it weekly for now. So what this is telling us is we would have gotten a 36% annual return if we would have done so, while the market would have given you a 12% annual return. So now that we love this strategy, I'm going to click on a stock, and after I review basic information about it, as well as view the chart, I'm going to make a buy decision. Now, I love all these stocks, so I'm going to make a buy decision on every single one of them except for two of them. Now, notice how I selected never buy for HOG and CLR. Now, those are going to now be listed in the blacklist tab. So, these stocks will never show up on your watch list again until you remove them from the blacklist tab, assuming they still pass the strategy. So now that we've saved the watch list, we can back out to our account screen, and the stocks are going to be listed here. Now, whenever a new stock passes, it's going to show up with a buy suggestion on this heat map. And also, if any of the stocks we had previously bought dropped out of the strategy, then they're going to show up with a sell suggestion. Now, let's import some stocks that we own and apply some filters to it to see if any of our stocks pass those filters. So as an example, let's pretend like I own all of these stocks. Now I'm going to go to the blacklist tab and add screeners in which I don't want any of these stocks to pass, such as downward revisions, high debt, increasing shares outstanding, or low quick ratio. Notice how we now have 3 stocks that have sell suggestions. Now once I click on this stock, I'll know why it has a sell suggestion. It's because SNGX passes the capital expenditures less than depreciation screener, as well as a low quick ratio screener. And high crush partners passes the increasing shares outstanding screener. So this is a great way to test any stocks you currently own for any yellow flags. Notice we saved that watch list, and again it shows up on your account screen. Now this little research a stock feature takes you directly to a chart on the stock. Now on this chart we have a candlestick available, as well as a breakdown that compares performance year by year to the market. In 2013, AFOP increased 153%, while the S&P 500 grew close to 32%. Now we can plot anything we want on this graph. For instance, institutional ownership. Notice how for AFOP, institutional ownership is gradually increasing throughout time, so it's becoming a little more appealing to institutions. Why don't we plot beta to see how volatile this stock may be? Now the blue line is beta. So you can see it hovering about between 1.4 and 1.2 since January 28th, 2011. So this isn't too volatile of a stock. Now let's apply a trading model to this stock to see how it would have performed based on this trading model throughout time in the past. Now the simple moving average trading model buys when the 12-day moving average is greater than the 26-day moving average, and it sells when that's no longer true. So notice on the graph how some parts are shaded green. Well, the parts shaded green are when the 12-day moving average is greater than the 26-day moving average, and the parts shaded white is when that is no longer true. Now I'm going to give you a quick tour of our stock screener to give you an idea of how unique and powerful and fast our editor is compared to any other product on the market. So I know I'm going to add about 4 conditions to this stock screener, so I'm going to go ahead and make 4 boxes. So I want market cap to be greater than 50 billion. I want it to pay a dividend. I want it to have good fundamentals highlighted by the Petrovsky F score. And I want it to have a price to sales that ranks in the bottom 35% of its industry. Now these are all the stocks that currently pass that strategy. Now a unique feature we have in our stock screener is the ability to essentially go back in time. So I'm going to choose the 3-month interval, and what that is going to do is display the stocks that passed this strategy exactly 3 months ago on October 28th, and it's going to give me an idea of how well they performed up until today. So if I would have bought both of these stocks and given it equal weight in my portfolio, I would have returned negative 1.45%, while the S&P 500 grew 4.3%. Now, all the analytical tools we had available in our watch list are available in our screener. Well, that was a basic demo of our product. There's still so much more to show you, so I'll keep creating videos, but thanks for watching for now. Bye.